So today I'm going to go into detail on the IPO strategy, and I'm going to use Snowflake to talk about it. So I'm just going to wait a few minutes, give people time to join, and then from there I'm going to dig in. Looking at the close. All right, let's see. Welcome everybody, welcome. Just to rehash again, pretty exciting today what happened. I'm going to go through my IPO strategy. I'm going to use Snowflake to actually talk about it and show you guys some things. Some of my former students have seen this before, but again, that's what I'm going to do. I'm just giving people a few minutes to join, and then we're going to dive into it. I'm excited. I always get excited when there's an opportunity to make money. So everybody, welcome, welcome, welcome. Richard, welcome. All right, let's see. I'm gonna give it another couple of minutes, and then I'm gonna dive in. I'm just looking to see how things closed. All right. So let me say it again, real quick. Today I'm gonna talk about my IPO strategy, my thoughts and opinions on how to trade them, and also how to trade this Snowflake. So I'm going to use Snowflake as my example to talk about the strategy to help you guys understand it. I'm excited about it. I did not, again, repeat, did not trade Snowflake today. I can almost assure you I will be in Snowflake. The question now becomes, when will I be in Snowflake? All right, so that's what's going on now. All right, so bear with me a second here. All right, so I guess it's time to get started. All right, so here's what's going on. Today so let me review a couple things. Today I'm going to talk about some of my different strategies I use, especially trading IPOs. I'm going to literally tell you what strategy I'm going to use on Snowflake. This strategy has been very successful for me. Snowflake, which you guys know just went public, is a little different animal because I've never had a company this size with this kind of move. That's what's really unique about this. But I'm going to explain the strategy to you. I'm going to give you some examples or show you, and then we'll go through it. Before I get started, a couple of quick notes, and I'm looking for it now. I know I put it up here. Where is it? There it is. Now, let's see if I can't center it. Of course I can't center it. So I'll see what I can do here. Can't center it. But you guys can probably see this. What you're looking at right now is a chart of DraftKings. And I had mentioned to you guys, now again, I'm not sure who was on the call. This was several weeks ago, but DraftKings had did a secondary offering. If my memory is correct, I think it was at $37 or $38 a share. The stock basically was trading at $40 a share. They priced it in the hole. Stock traded well. I told you guys that the first move I would look for is a move through the 40. And then I said, and then I'd be a major buyer on a move through 44, which was the old high. So what you can't see in the chart, this past Monday, the stock went through 44. Let me back up for a minute. Confession here, I missed it. I was busy. It doesn't matter what I was doing. I was busy and I wasn't in the office and I was out and about doing some errands I had to take care of on Monday. I missed it. The stock ran from 44 to 48. A couple of Wall Street firms came out and talked about it and it raised their numbers on it to 55, I believe, was their target. And I know the stock is hit as high today as 52. So bear with me a second. I'm just pulling up the chart as we speak. DraftKings. So again, it ran through. Well, it didn't change for me. Oh, I'm sorry. I'm on a 5-minute chart. I apologize. I need to go to a daily chart. There it is. So yeah, the stock ran through that 44, ran as high as 53 and change. Looks like it closed today at 51. So again, the reason why I bring that up is the strategy does work, guys. You know, once you get that stock out of the way, and that stock breaks. Another thing you'll notice is it broke on tremendous volume. Now, this leads me to what I want to talk about today. All right, so again, I'm going to talk about my IPO strategy, how to use it. I'm going to talk about how I get involved with it and what I do with it. So, believe it or not, I put up this earlier today. This is PRCSMM, PRCSMM. PRCSMM is the 6 criteria I use when I start to evaluate companies, both private and public. Now, the reason why I bring it up is these 6 criteria. Every great company that I've looked at over the last 30 years, both private and or public, they all have these 6 criteria. When I looked at Snowflake, I started going through Snowflake. Snowflake has these 6 criteria. So what I'm going to do is let me just basically run through these 6 criteria with a brief explanation on what it is, and it ties into what's going on. So let me tie it in. A lot of you, including me, were trading earnings season. And you went out there and you said, look, earnings season's here. If company beats the number, the stock's going to run. If they miss the number, the stock's going to go down. So you basically went into the marketplace this last month and a half, basically looking for what I call a catalyst. And that's not my term, it's a Wall Street term. A catalyst which was going to drive the value of the company, either drive the stock price up or drive it down. Now, one of the things I've always told my students is the the quarterly earnings announcement every quarter is a catalyst. All right. So in my PRCSMM model, in my PRCSMM criteria, number 1 is product and or service. And what I mean by that is for me to really be attracted to the company, they need to have a product and or service that could possibly become the industry standard. It's new technology, new product, new service. It's going to dominate the market. People are moving to it. You can kind of see these things. You can see them as they're developing. They're usually early on, but again, you can see them develop. So that product and service, I mean, think about it. Apple basically ran off the Nano, which eventually became the iPad, which became the iPhone, and they've been running off that ever since. Google ran off of their technology in terms of coming up with a better search engine. All right. The list is endless. I'm not going to go through all of them, but you understand a catalyst is something that's going to drive a corporation's value up or down. It's usually tied to some type of event, product. It could be a number of things, and I'll go into a lot more detail in another video. I can't do it right now. Risk reward. If you're going to take the risk on this security, on this investment, and you're right, will you be well rewarded for it? Now, again, I'm not talking about a 5 or 10% rate of return. I'm talking about, again, think about if you had got involved in Google, Facebook, any of the names that you guys know that fit my pricing criteria early on when they first went public or even before that. Capital. What are they going to use the money for? What's the capital being used for? It's a big question. You need to look at that. Are they efficient with their capital? How are they using the capital? What do they intend to use this capital for? Number 4, scalable. Can they grow the business without having to grow cost of the business? So let me explain. Tesla, Elon Musk, great company. All right, he's done a great, the product's done a great job. I'm not happy with him as a CEO, but great product. So let me clear that up. But here's the deal. In order for him to expand and sell more product, he has to build more and more factories. His costs keep coming as he tries to expand. Now, I'm just going to use Snowflake for instance today. Snowflake is artificial intelligence. It's a software. It's an application. When corporations develop their softwares, these applications, all the costs are up front. At that point, once they roll it out to the marketplace, as they go forward, they don't have to keep developing the software. They don't have to keep spending money on that. All the costs up front, so all the profit goes to the bottom line once they get past those costs. That's a scalable business. All right. Next one is market. Is this product have the ability to carry an entire market, an entire industry, an entire sector? Could this product end up forming a new sector, a new industry? Case in point, going back to me, is Toys R Us formed a whole new industry. You know, the social media with Facebook and Snapchat formed a whole new industry. Google, a whole new industry. Netflix, a whole new industry. They're category busters. We like that. And then the last one is management. You know, there's a saying on Wall Street, we bet on jockeys, not on horses. So who's running the company? What's their experience? What's their goal? Who are they? Now, I bring all this up is because as I go through what I do in looking at these IPO stocks before I invest, this is one of the things I look at. These are some of the things I look at. And what's really interesting and key on this is when I do look at them, I look at them with the same eyes and asking all these questions. Can it do this with the product? Can it do that with the product? I look at all that. So let me dig in a little further with some more information here. All right, changing pictures. I hope I have the right one. If I don't, I will soon know. Oh, it looks like I don't even have that one. So that narrows that down. Now, I can't see this at all. So I'm going to tell you what this is and what I'm doing with it. I did post a lot of these pictures already online. So if you go through, you can see them and you can study them later. But what you're looking at now is the prospectus cover on Snowflake. Now, the things I have circled, I have two items circled. One is right up here on top that you see circled is the price range they were talking about. Now, the original price range on Snowflake was, I believe, 85 to 100 or 95. And my numbers could be off again. Well, you know what? Let me do this too. Let me go and pull up these charts someplace else where I can really see them and make sure that you know what I'm talking about. So, the first IPO, the first offering range they came up with, price range, was between 75 and 85. So they felt that they were going to be able to bring 28 million shares to the public between $75 and $85 a share. On the bottom, you'll see circled are the underwriters. Goldman Sachs was the lead underwriter. These are the only places that you can get IPO stock from. You had to have an account there and had an account in good standing, and even people with accounts in good standing got froze out. So don't expect any IPO stock. I didn't expect any IPO stock. Then, let's see, what was that? 6 days later, they raised the offering price to range from to $100 to $110. Now, the reason why I bring it up is this. That is a bullish sign. Anytime you see them raising the price range when they're going to bring a stock public, it's telling you that they're seeing demand. Now, I had heard the book was 10 times oversubscribed, which means that they were looking for more. They felt that they could actually not only sell the 28 million shares, but they could do 10 times that. So that's what I heard. But again, you can tell this is oversubscribed because a fact of they raised the price on this offering. So it's oversubscribed. Now, the next thing I'm going to go to, and bear with me as I find these things. Hopefully I'll find it in the order I want to find it. The next thing I'm going to is use of proceeds. Use of proceeds, basically, I have it circled there. It tells you how much money they plan on raising and what they plan on doing with the money. Now, again, as I told you in my price and model, one of the things we're interested in is capital, how they're raising their capital, and then what they're doing with the capital. And so you can see here that they're basically using the capital for basic general corporate purposes. They're not retiring any debt or anything. So nothing bad here. I've seen somewhere they're coming out and the corporation has so much debt and leverage, they're raising capital to try and reduce the leverage and debt, and it's just a nightmare. So again, one is use of proceeds. What are they using the money for? Right now, we're in the prospectus. I'm going through a prospectus. For those who don't know what a prospectus is, it's the closest thing to inside information you'll ever get on this company. It tells you everything. So that's what I'm actually going through now as I'm going through and telling you everything that this corporation is doing. All right. Let me see if I can find my next slide. And I can't even see my own slides, so I can't even tell you what this one is. So let me see what this one is. All right. Well, you have all these slides, so let me do this. Let me go back to me, and as I find some of these things, I'll pull them up. The other area I look at is the business. Now, basically, that's what it says in prospectus, business. And again, I wish I could find it for you guys. But again, it's in here. The reason why I go to this page is it tells you who they are and what they do. What is the business that they're in? All right. You can't even begin to talk about a company until you know what business they're in. So by going through this, we can find out what business they're in. And Snowflake right now is in the cloud storage business. But what they took it to another level, and what I mean by that is they actually have tied artificial intelligence to the cloud storage facilities. So again, I'm not going into a lot of detail here, but I read through this part to understand what the business is, what they do in the business, and how they can separate themselves from the crowd in the business. Now, another thing that I look at in here, which is under the same thing, is they give an industry background. So then they start talking about what's going on in the industry, who the players are, how the industry became and developed. They have in here some annual growth rates for the industry, annual growth rates projected for the company. It's a wealth of knowledge that you need to flip through. Because what I'm trying to find out is, are we looking at possibly, quote unquote, the next Microsoft, the next Intel? Are we looking at the next Google? Are we looking at the next Amazon? Are we looking at the next great company? The way you find out is you go through this information. Now, one of the things they talk about is their opportunity, where they think they can grow from, where their growth is. They also talk about their growth strategies, what they're going to do to grow the company and how they're going to grow the company. So all this is in the prospectus, and I'm flipping through. And the same prospectus on Snowflake, they have their customers, and they have a list of who their customers are, who they're doing business with, and what industry they're in. So you get an idea of who their company, who they're dealing with. And again, I'm not going to go through it. You guys can go through it on your own, but you can go through here and see who they're using, who's using their platform, who's using their technology, who their customers are, and their Fortune 500 companies. Now, what else do I have? They also have in the same prospectus, the competition. Who is the competition? So by going through all this, we can see who the competition is. We know what they are. They tell us where they feel they're vulnerable, where their weaknesses are. Again, you can find out and know everything there is to know about this company just by flipping through the prospectus, a free legal document. The other things that show up here are the financials. And again, you can look through it and see. And I stopped on the income statement because here's what's going on. 2019 revenues were $96 million. 2019 revenue was $96 million. 2020, which is not even over yet, revenue has jumped to $264 million, over 100% increase in revenue. Now the corporation, as I told you, it's a software company. Most of their costs are up front. So right now they're not making money. You can see it on the prospectus. You can see where they're putting the money at in terms of their expenses. But again, they are making money. They are making money. Now, let me see what else I have. I have the balance sheet, statement of cash flow. But here's where I want to go. The other thing that's on here is who senior management is and how much stock they own. Now, as I said to you earlier, Wall Street loves to bet on jockeys, not on horses. And again, I'm just picking on Snowflake. Snowflake is being run by a bunch of high quality jockeys. Jockeys that have run other tech companies. Jockeys that, in fact, one of the stocks that I own right now, ServiceNow, the former CEO of that is the one who's running, which is Frank Slootman, is the one that's running Snowflake. So again, you get to see that. Now, I'm going to take this a step further, and I know my former students all know this, and they're using it to make money. They better be. So bear with me as I flip through. And here's where I take all my students. One of the things I'm looking at now in the prospectus, it tells you who the outstanding shareholders are before the offering And they tell you who the largest shareholders are after the offering and how much stock they sold. And here's what's interesting. One of the senior management sold a small percentage of their position. So they basically cut their position in half during the IPO offering. That's it. No other senior management has sold any stock, including the founders. And here's what gets really interesting. On this same list, in terms of who the largest shareholders, we also get a list of the VCs, the private equity firms who also are invested in the company. As I flip through this, it's a who's who of VCs and private equity firms. And by the way, for you guys, it's a little easier than when I started. You guys can actually take the name of that firm, that company, and do a Google search and find out what are the companies they own, their history, their performance. You can see all that. So as I go through this and I look, one of the keys for me is this. I always want to know what senior management's doing with their stock in the IPO. I always want to know what the private equity, the VCs are doing with their stock in the IPO. Now, you've heard me say this before. I've seen it where senior management has sold half or all their position during the IPO, and needless to say, the stock has not performed. Reason being is, senior management knows more about the company than anybody else. Information's asymmetric. They know more information than anybody else. They're the ones who decide what and the future of the company. They're the ones who already kind of know what they have going forward, what their projections are. Them buying or selling speaks volumes. So here's what we can expect from this. They haven't sold any stock, senior management. Now, they've come out and said they think this is a great company. They don't plan on selling any. But here's the deal. If they haven't sold any stock, all right, if they decide they want to sell stock, and this is pretty customary what happens, you'll see these corporations come back to the marketplace in 3 to 6 months and do a seasoned secondary offering, which means they'll start to sell more and more IPO stock, all right, at the current market price. So I say that to tell you this. Based upon everything I'm seeing, I would expect this stock to trade higher. All right, but let me give you a little FYI here. Now you're looking at a 5-minute chart today of Snowflake. Again, Snowflake was priced at 120. I believe it opened up at 241 or 230, somewhere around there. Been as high as 319. Make sure my numbers are right. I'm checking my numbers, but I believe it was 319 is the high. And bear with me 1 second because I'm going to check and let you know what the high was for today, because it's key for us. All right, so the high today was 319. If you also look, and I'm putting the chart up where I can see it, because this screen is just small, so bear with me a second. I'm going to put the chart up where I can see it. And I'll switch it to a 5-minute chart, which is the same thing that you guys are looking at. So here's the deal. You can see that the stock opened up, ran up to 319, the first on the open. And then from there, it backed off and it settled down, went through a trading range between 276 and 260, somewhere around there. Broke 260 right near the close. And at the market right now, it's trading between, basically, it looks like 256 and 247. Now, here's why I give you all these numbers. One, first and foremost, the low on the stock right now is 231. Write this down, guys. I don't have to write it down because it's stuck in this brain of mine. If the stock breaks 231, for the aggressive traders, you can get short and look to pick up a couple of points to the downside. Again, follow me now. I'm not saying it's a bad company. Don't misinterpret what I'm saying. I'm saying to you that if the stock breaks that 321 level, because understand this, when the stock ran up to 319, and then you see from there, it just started to trade down and went down to that 232 number, which I'm talking about. That was people taking profits. People that got in early, people that had IPO stock, that's them taking profits. They ran the stock back up to that trading range, and on the close, they couldn't hold that trading range. It's okay though. Again, you're talking about a $251 stock price on a stock that was priced at $1.20 today. So that's the key number. Now, follow me. And this has happened before, especially on hot IPOs. There's so much built into this stock. There's so much hype in here right now that the stock's going to have a hard time living up to that price, that hype for the next couple of days. I've seen some that have taken weeks and months to work through the hype. So what am I saying? I'm telling you right now, right in your books, when the stock breaks through 319, when it goes through 319, it's going to run again. Let me say it again. When this company goes through 319, just like I told you what happened with DraftKings, when this company runs through 319, it's going to run, and you can look for more than a 10% move on that day when it goes through 319. So I got a couple of price targets. As I said, write it down. 1, 319, buy. If it goes through 319, just buy the stock. Put your stop loss. I'm not sure where yet. I'd probably put my stop loss minimum 10% below that. So if we're talking about 319, I'm talking about basically $31, $32. So take a $32 off the 319 of the price you pay, which would take you down to about 290. Put your stop in about 290. What's interesting, 290 would be my stop. Give it some leeway. The other number I gave you, if the stock breaks, and I'll give you the exact number, give or take, it looks like the low is 231. That stock breaks 231, you can short it for a short period of time. In other words, I'm not saying the stock company's headed back to 120. I'm not saying that. I'm saying if it breaks, and you can see it. Look at what happened. When the stock hit the 319 and pulled back, it went from 319 over the next 20 minutes down to 332. That's volatility. So I'm not telling you that this stock, hiccups. I'm not telling you that this stock, is going out of business or going down. I'm just telling you from a trading standpoint. If you study IPOs, and by the way, I've been doing this for over 30 years. I've been trading IPOs for over 30 years. IPOs in the secondary market, IPO stock, seen this 1,000 times. Some of my students, that have been in class with me, we sat there. I remember we did this with Snapchat and some other stocks that IPO'd. This is how they move. This is how they work. Again, this is not based on fundamentals. It's just based upon patterns and habits. So again, 319 is your buy. Through 319 is your buy. Put a 10% stop loss on it. Look for a 10 to 20% move on that. If there are options at that time, you might want to play the options. I'm not sure. The reason why I'm saying I'm not sure is, one is there might not be any options. Two is there might be a lot of premium in those options, which means if there's a lot of premium because of the volatility, you might not make as much money as you should. Let's see. All right, let me get out of this because I'm having a hard time seeing what you guys are talking about. All right. Lance, excellent question. It's interesting. As I was going through the prospectus today, and again, I do apologize because my memory's not the best. As I was going through the prospectus today, and this is why you do this, the lockup period is sooner than 90 days because of the performance in the stock, believe it or not. So in looking at that, and I can't remember what page it was on, I saw it in the prospectus today, but if the stock has appreciated, I believe it was more than 100%, then the lockup period is over. They shorten the lockup period, so it could be a lot shorter than 90 days. Again, it's in the prospectus. I know you guys don't want to read, you want the shortcuts, I want the shortcuts, but I'm telling you, when you start reading these prospectuses, you understand companies, you understand how they work, you understand what the catalyst is that's going to drive the company, and you can understand why you would want to invest in the company long term. But we can use this IPO as a trading range. And again, I'm telling you, I've done this before. I do it all the time. And again, when it breaks through, and by the way, I threw fundamentals out the window right now. I'm not looking at PE ratios, which I never do anyway. But I'm not looking at P's. I'm not looking at valuation. I'm not looking at it's larger than Twitter. It's twice the size. I don't care about any of that. The only thing I know is that, and think about this: how many people you know that said, "Man, I'm buying the stock as soon as it opens. I'm buying the stock as soon as it opens." Institutional investors that got froze out brought the stock, and the reason why they brought the stock is they don't care about whether they pay $319 or $250. They don't care because they plan on holding the stock long term, and they have a lot more money behind it, so they're trying to build a position. You and I don't have a lot of money behind us. You and I, I lovingly put, I don't want to buy the stock and have to sit around, here at the 250 level, wherever, and watch it go down and trade sideways. I want to make my money and make it in a timely manner. So that's the reason why I do this. Now, I know I keep saying this, but I can, again, show you stock at the company. Alibaba had the same kind of move I'm talking about. Stock, I was priced at 85 or 80 bucks, opened up, ran to 120, pulled back, ran again, and then it pulled back, and it stayed down for several years, for 2 or 3 years before it actually took out that old high. So again, I believe we can trade this. I believe we can make a lot of money doing that. All right, I'm gonna take any questions on this right now. I mean, there should be a lot of questions. If there's not, that's okay. But if you have any question on this, now's the time. Again, look at the price of model, look at the acronym, go through and look at the company and ask yourself, is their product disruptive? Is their product going to be the one that can change the industry? And right now, it is. That's the reason why you saw Warren Buffett and his people taking a position. That's why you see all these institutional investors. That's why the stock ran the way it did. So the product has the ability to be very disruptive. They could become the industry standard. Again, artificial intelligence tied to the cloud technology, which is what they're talking about. Ooh. So that's what they're talking about. Now the other thing, and I apologize for that, my pup is messing with the lighting. That's why you see my lights moving. All right. The other thing with pricing, again, reward to risk. The stock has shown you that it can give you big moves. So I'm not even worried about that. And depending on how you structure your trade and you structure it, your move could be really, really big. All right, so that's that. Capital, we already went through what they're using capital for, general corporate purposes. Scalable, software, scalable. Scalable is software. Yeah, they might come out with a 1.0 version and a 2.0, 3.0, 9.0, but we're not talking about major R&D money. We're just talking about them improving and fixing the bugs in the current software and the current application. All right, so we got scalable market. The cloud industry is going to continue to grow. No one doubts that. You're probably looking at about a 15 to 20% compound annual growth rate for the industry. Not for the companies, for the industry, for every company in the industry. All right, they have the ability to actually dominate the market for artificial intelligence on the cloud technology. And then last, like I told you, management. When you go through and read who these people are running the company, they have all the experience in the world. They've taken companies private, they've taken companies public, they've sold companies. These are the jockeys that you want running the company. They appear to have the ability to take this to become a Fortune 500, which it already is, but take this to be a leading company in the industry. All right, I know I rambled a lot. I went through this a lot. In fact, my mouth is a little parched. I'm gonna take a sip of water, give you guys a chance to type in any questions you might have, or a different topic if you wanna do it. I had promised that I was gonna talk about, well, I did. I was gonna go into more detail on this. I'm gonna put together a PowerPoint on how to read a prospectus, how to go through a prospectus. I already have one, I just gotta dig it up. All right, anything else? Again, DraftKings. We talked about catalysts. What's driving DraftKings stock price then? What drove DraftKings? DraftKings, as I told you earlier, went from 44, broke out through the old high, went from 44 to 51, 52 in virtually 3 days. It's got a new price target of 55, and I'm telling you that price target's probably low. And the reason being, DraftKings has a catalyst that's going to drive the value, and that's what Wall Street's all looking at. Again, anytime you're looking at a company, ask yourself what's going to drive the value. Now, a lot of you're coming at this, you understand it, but you don't understand it. So let me explain. A lot of you are looking and say, wow, this company's earnings doubled. Stock price has got to go up. And you'll think that the earnings are the catalyst. The earnings aren't the catalyst. The question is, what product, service, what did they do that drove revenue to generate that kind of earnings growth? That's the catalyst. Was it a new product? Was it new customers? Was it Was it new technology? Was there a change in law? What caused them? What happened that caused them to be able to double their revenue, to double their earnings? What happened? What's driving that? In DraftKings' case, what's driving this? DraftKings signed a contract with ESPN. DraftKings is going to provide ESPN now with all the data for betting on sports. So what's happened now is DraftKings now is starting, by signing ESPN, they're grabbing market share. If they can grab another one of these sports channels, it's only going to increase, but they grabbed ESPN, the number one sports channel here in the United States. So every time you watch ESPN now and you start asking, they start talking about betting or the line or the spread, they're pulling that data from DraftKings. That's going to add to their bottom line. It's another way for them to sign up customers. All right. I've talked enough. I spit it out enough. I'm just looking at my pup over there. I talked about it. I spit it out. I'm not sure. I'm not sure who just got here, but saying, let's talk about DraftKings. About Snowflake. I've been talking about Snowflake. I apologize if you missed it, but we've been talking about Snowflake, and we'll move on from there, but we talked about Snowflake already. I will post this recording like I always do. So for those who want to know more about Snowflake and what we talked about, feel free. The other thing to do too is make sure that you look through the pictures I posted up, which a lot of them are from the Snowflake's prospectus, and it shows how I use that data. All right, let me see. I got 20 minutes. Any other questions, any other topics, anything else? Last week, somebody asked me about the blank check companies. These are companies that basically are coming to the market, IPOs. They basically just raising capital, and they're going to take that capital and go out and start buying companies. I do not want to invest in a blind pool. If you're investing in a blind pool that has no assets, you're basically buying it because they're raising money. What you're doing is you're really just raising money, or you're buying an investment based upon management and their ability to make the right moves. I don't like that, never have. Who's to say that management won't overpay for a company, overpay for it, or they brought the right company or made the right moves. So I'm not a big fan of that at all. I'd rather wait to see what they purchased and then look from that point. But to buy, just think about it. If you're a football fan, that's like me saying to you that we're going to start an NFL team in some city, and I've hired Bill Belichick as my coach. And you say, oh, wow, you guys hired Bill Belichick, you're going to win a championship. And I'm looking at you like, how, we don't have anything, just a coach. We don't have any players. We don't have a coaching staff. We just hired maybe, again, I'm not saying Bill Belichick depends on what you think. I just hired what I think is the greatest NFL coach of all time. And you're telling me now that you're going to bet on my team winning the Super Bowl just because of who I hired. There's no other assets in the corporation. Just a bag full of money and me with Bill Belichick. That's what a blank check company means to me. The ones who've done well over time are the ones who actually gone out and made acquisitions and bought companies. So I would spend more time looking at following them and what they're purchasing, putting in their portfolio, than just investing in something because they've raised a bunch of money and they've got the senior management are experienced VCs or experienced private equity guys. So hopefully that makes sense for you guys. All right. I don't see any questions. Anything else I can tell you? Again, I got so wrapped up with stuff. So wrapped up with this. The Fed kept rates the same. Thank you. We talked about that. The Fed kept the rates right at zero. Sorry about that. And as it says here, until 2023. So here's the deal. The market has already priced in the fact that the Fed's going to keep rates at zero. Market's already priced that in. So that's what they expected. That's what they're looking for. They're not expecting for the market to be over. The other thing about this too, which becomes really interesting, is, which you guys have seen, the Fed has shown the willingness and doing it of pumping money into the system to keep this market afloat. They're willing to pump money into the system to keep this market up. So basically, for those who understand, the Fed has a put on the market, which means they're not going to let the market fall apart. They'll actually raise money. They're buying securities. They'll do whatever it takes to keep the market afloat. The thing I always worry about is, I know the Fed is bipartisan, and it's not supposed to be influenced by any politicians, but I always get nervous about what's going to happen in terms of the capital going into the market after the election. And it's not because Democrat or Republicans don't spend, it's just because I know President Trump has pushed hard to move this stock market. He's pushed really hard. And if he loses that election and he's not pushing as hard, what's going to happen? Is the Fed going to slow down? The Fed came under pressure, as you know. Trump was talking about firing Jerry Powell. That was the rumor. So very interesting situation that's going on here. But right now, you can always look and say that the market is going to do whatever, the Fed's going to do whatever it takes to keep this market afloat. The thing I worry about now is, which I've always talked about, is how this is going to affect the banks. And the reason being is the banks make their money off the spread between interest rates and what they pay for money, which is interest rates, and then what they loan it out at. With rates being as low as they are, there's not much fat for them to work with. Now, the banks have moved into the brokerage business, which means they can do everything that the brokerage firms can do. But I don't know if the banks want to do that, because that was part of the problem in 2008 when the market imploded. The banks were doing Wall Street business and they weren't set up for it, and they had a lot of exposure. So just food for thought. All right, guys. I can't emphasize this catalyst thing enough. You guys have to figure out, when you buy a stock, you got to ask yourself, what's going to drive the value up? What's going to make this stock or this company more valuable? That's a catalyst. And believe it or not every corporation has a catalyst. And in most cases, most corporations only have one catalyst. You're not looking at 3 or 4 catalysts. You're only looking at one catalyst. So, and you guys can even, go back and look at your portfolio. Look at the stocks that you own. Look at the ones that have worked and run. And then ask yourself, what drove them? Now, you can say it was the market per se. You can say it was this. But the bottom line is there's something going on at that company that has driven it. And those events is what Wall Street is looking for. So when you're looking at these companies, again, if you brought a stock for earnings, you got to dig a little deeper. What really happened? I had someone ask me the other day, and it wasn't a bad question. He said to me, I have this stock. I've got, a certain amount of profit in it. What should I do? And my comment to him was, which is my comment all the time, is, why'd you buy the stock in the first place? What led you to buy it? And he explained to me, he said, I brought it for this reason and that reason. And I said to him, I said, well, if those are the reasons why you brought it, those events have happened, which means now they're built into the price of the stock. So he said, oh, yeah, you're right. I said, so if that's the case, then take your profits and move on. So one of the ways you decide when to sell a stock, you got to ask yourself why you brought the stock in the first place. If you brought it for a certain event, a certain thing, then when that happens, you got to make a decision. Now, some great corporations, some great businesses, you brought it for a specific reason. When that happens, you'll look and say, wow, this is better than what I thought. And there's another reason why, so you might continue to hold it. But if you don't have a reason why you purchase the stock, if the only reason why you purchase it, you said because the stock price is going higher, then as soon as the stock price isn't going higher, you're going to sell it, and it could be the wrong reasons. So to improve your strategy, your sell strategy, always ask yourself, why did I buy the stock? There's no right or wrong answer. It's just why. And if you find that you bought a stock because Kramer talked about it on TV, or I talked about it, and you haven't done your work or your research, then you're setting yourself up for failure. So now the other thing too is next week. Well, first and foremost, let me go back. I got a lot of my former students on this call, so let's a couple things. One, Blake Cromwell, who was in my second ASAP class. Blake now has been invited to be a board member for Titan Capital Management. And those who don't know, ASAP changed its name to Titan Capital Management. So that's good news. One of my older students now is asked to be a board member on the program that I started. I think that's great. The other news is another one of my former students who actually was instrumental in helping me start ASAP. He was part of the Smith Club I started. He's going to come on next week and explain a trade that he's been doing in the using options that's been putting up a 100 to 200% return for him. So he's going to come on next week. He's going to, he and I talked today. He's going to walk you through what his strategy is and what he's doing and how he did it. It's pretty interesting. So again, I invite you guys, as you guys go out in the world and start trading and start making money. If you're using my ideas, great. Come back and tell us what worked for you, what didn't. If you have your own strategy, and be ready for this, because I've had this discussion with people all the time. A lot of people are afraid to share their strategy. If I share my strategy, everybody's going to go do it. Trust me on this. Not everyone's going to go do it. They're not. They might talk about it. They might say, wow, this is great, but they're not going to use your strategy. Believe me, I've been doing this for 30 years. I've had conversation with people, and it's funny, they'll ask me, Mike, what's your strategy? I'll share it with them. And you talk to them 6 months later, and like, no, I never did it. And I just kind of chuckle. So don't worry about sharing your strategy. You'd be surprised how many people aren't going to listen to you, even though it's working for you. All right, I'm going to sign off right now. I don't see any more questions. I'm going to sign off and get this thing up on the IGTV and also get the video up on, and also, let me back up. I'm going to post this video on, on YouTube. After I post it on YouTube, excuse me, I'm going to post it on YouTube. When I post it on YouTube, I'm going to add some pictures. All the pictures that I have, I'm going to add to it so you can have those pictures. So you can just basically go to YouTube, pull up the video, and you'll have the pictures as well as this discussion. All right, with that said, guys, I appreciate you. I appreciate you stopping by and let me ramble on a bit. Hopefully you guys are using these strategies to put money in your pocket. The goal has always been for you to put money in your pocket. All right? The market's not hard to figure out. It's really a lot easier and simpler than people think. You just got to sit down and apply yourself and come up with some strategies. And strategies that work. If your strategy is not working, and again, I'm on this journal thing. If your strategy is not working, you should be keeping a journal. And if your strategy is not working, then get a new strategy. All right, go find a new strategy, but don't keep doing the same thing over and over again if it's not working, expecting different results. If you can't isolate stocks that are going high or going down, that's a bigger problem. All right, just don't go out there buying stocks randomly because, like I said, you heard me talk about it. You heard somebody talk about it on TV. You got to have an understanding. If you don't have understanding, I'm telling you, you're going to make the wrong moves. And typically the wrong moves are when you don't understand why you bought the stock in the first place, or you become emotionally involved. All right, I got to go, guys. I do appreciate you. Have a great week. Again, 319 is my number. I'll put that, I don't care where I'm at, what I'm doing. I have alerts set up. When that 319 comes, I'm going long. I'm telling you right now. All right, 319, when it goes through there, I'm going long. And if you guys don't believe me, when it does go through 319, if you want, you can hit me up on a DM on IG and say, Professor, did you go long? And if I happen to be in class or miss it, I'm like, no, but I'm gonna go long in a few minutes. Thanks for the heads up. All right, guys. Again, have a great day. Talk to you later. Thanks. Bye-bye.